And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another beautiful day out there, and today is Thursday. And what did we say? A major move was brewing on Monday this week. And here's what we were talking about. Again, why it's so important to identify bullish and bearish divergence. In my book, we've got the two higher highs ahead of this high, right? Two higher highs in price and then two lower highs. I'll define that as more of a complex top over here. And by closing below this wick last week on Friday, we said, hey, two drives of bearish divergence, hidden bearish divergence confirmed. And we were looking at a shot down to this green box right here, or the yellow 21 coming in at 108.58. And we did say this, look, if the dollar was going to go down, risk assets like Bitcoin and stocks would probably go up coming into the early part of this week. That's what we said. And what do you know? Bitcoin is playing out a bit of a bounce from Monday this week. Bitcoin is up 7%. So not bad for a start in the week. And I think it was up as high as 9%. But what did I want to talk about? Getting back into the dollar just for a moment. And this is the point I wanted to make is that, I want to reiterate my long-term stance on the dollar. I am macro bullish. So even though in the short term, we could come down to this green box, if it really gets going, next target would be, around 105. And that could take, a month or two to play out. Not going to happen overnight. But based on the monthly chart for Bitcoin, the monthly chart on the dollar, right? We had this massive descending triangle. We broke out of it. And to give an idea on these targets and why they're where they are, if you measure this from the 50 percentile, 50% full, the break takes you up to the 1985 high. I imagine the dollar ends in some kind of a parabolic blow off top, and that's based off of this range. As we broke this range, and again, this was a 4-year range going from 2008 to 2014, a 6-year range that was broken. We hit the first target right there. We consolidated for another 4 years. This is, again, the monthly time frame. So these kind of activities or signals can take 6 months to a year to play out, right? So think about the monthly time frame is going in slow motion. But that is right where an extremely volatile move will end at the 423. But just giving us some secondary targets. Again, we broke this range, second target up at 120, revisiting the 2002 high on the US dollar. And I definitely do think we will run into some selling pressure right there. And in the short term, again, based on the daily time frame, the dollar very, very likely comes down to this green box right here. We just lost the green 55. We could get a little bounce here short term, maybe as high as the 618. Which would be somewhere up at 112, but I do believe the bounce is going to get faded, and we play out those divergences are very powerful. Again, this is on a weekly time frame, so maybe early part, mid next week, the dollar comes down and tags that 21, and we see if it bounces from there. So if we know that Bitcoin's going down, the dollar's going down in short term, risk assets have the ability to rally. And I'll just bring us into kind of the shorter term time frames on Bitcoin's price action right now. And what you can see on the 4-hour time frame on CMEs, from this high to this low on a bullish retracement, we are sitting right in between the 0.5 fib and the 618, giving us our range on the 4-hour time frame, and any kind of a closure above or below here. Next stop is going to be 21.855 to the upside, and to the downside would be 19.8. And I would say this, as long as Bitcoin, if Bitcoin does lose this region at 20,400. Very likely going to come test this region. If this region is lost, that's when I would start to think of this as a bit of a bull trap. And the dollar, and as we said yesterday, very likely when you break out of these descending triangles, you want to see a retest of the triangle. So again, if the dollar pulls up from here, Bitcoin could come back down and test and then give us a shot up. But I do believe if we start losing this region at, call it 19, I'd even put it at 19.9 on a daily or even a 4-hour closure. If you're a little more aggressive, I would start to call this a bit of a bull trap and the measure move not to play out. But based on our bias that the dollar is going to come down, and by the way, this is the measure move on this descending triangle, which once again, a descending triangle has lower highs. If you measure from the 50%, the breakout gets you right up to the highs. And what else is this in alignment with? This is our daily BBWP signal that we've been talking about for some time now. I'm just going to clear up the chart here. But basically on CMEs, every time we've seen low volatility and expansion above 20 percentile, which is exactly where we're at, the average move has been 24% in either direction, and the stochastics giving us the right direction about 80% of the time. So with 80% certainty, we could say, hey, this move is going to play out to the upside. Again, it's just statistics and probabilities. It's not a guarantee. So where would a 24% move take us from the low? So 24% would bring us right into that high at about 25,000, and call it 24,000, 24 to 25,000, somewhere in that range. That's if the market really gets going. And I'd say the dollar would have to do this. The dollar would have to, in order for us to get the full length of that move, that 25%, I'd say the dollar would have to lose this green box and play out a bit more downside over the next few weeks. Otherwise, I am postulating that this move doesn't have much more legs than this 22.5 area, which would be about a 15% move, 15 to 20% from the low. And anything lower than this high on the daily time frame, in my book, is just going to be maintaining the weekly downtrend, which here's where it gets interesting, actually, is CME is going to close tomorrow. And again, if we close anywhere here or higher, anywhere above this wick, in my book, will confirm this as a low, and you will have multiple drives of bullish divergence, hidden bullish divergence coming back from this point right here, which is the low of 10,130 going back all the way September 2020. So what do you see here? You see higher lows in price, but lower lows in RSI. And this would confirm this as an additional, so 1, call it 2, 3, 4, would give you a shot up to this, 4 drives would give you a shot to the green 55, but I'd wait for confirmation with the weekly closure above this high right here at 25,000. If we do get a weekly closure above there, I do believe that green 55 will get tagged, and that would be more in line with a 54% bounce, which is going to be typical of what you would see off of a extremely low volatility read on the weekly time frame. So this is the lowest read in volatility for the weekly CMEs. So we are going to get a rather explosive move at, whether you like it or not, as this expands. And again, how do we define expansion? So we had expansion here, and what did that move give us, right? So as volatility expanded from this pivot right here, I mean, it was a bit of an outlier. Actually, we were expecting a bit larger of a move. So it was 20% to the downside. Hey, maybe we get 50% to the upside, come up here and fill the gap. And then the rest of the kind of bearish news plays out. We will be keeping an absolutely close eye, a keen eye. And I think it all starts actually back down to the 2-day. As we see volatility expand on the 2-day, that's going to give us direction. And 2 days are crossed up as long as we're above 18,593. That'll be closing tomorrow. And then the daily will remain crossed up above 19,300. So, yeah, signals in force. And basically, we're looking for expansion to move this price action to the upside. And right now, we are coming back and kind of retesting these highs as we broke out. I wouldn't mind it coming down and retesting this high. And we are about to get the golden cross on the 50 and 55 and the 200. Something else to note is it's usually not the first cross that gets us a big move. It's the second cross. So we had the first cross here, a bit of a fake out. Here's the second cross to the upside. And that is not confirmed yet on the 4-hour time frame. So that's something to keep an eye on. The daily is still down. The 12-hour is still going to be down. And we are getting the golden cross, the silver cross on the green 55 and the yellow 21. Another point for the bulls telling me, hey, this move could have a little bit more legs and volatility is still expanding. Stokes will remain to the upside as long as we're closing above 19.9 on the 12 hours. So that's going to be an important pivot there. 19.9 is probably, where is that? Yeah, that's that yellow 21 right there. And to the upside, 21.1. That very likely, and you can see this confirmed. Let's see. From this pivot right here, price is making lower lows. RSI is making higher lows. Yeah, from this pivot right here. So price is making lower lows, RSI making higher lows, and I am looking for this move at least minimum based off of this 12-hour closure, the silver cross, probably looking at a move up to 22,450 at a minimum off the 12-hour time frame. However, again, I would mediate that with the 4-hour and those levels we were talking about. If for some reason Bitcoin comes back and closes back below 19.9, I would say party over and bull trap. What else did I want to bring up today? We said we'd follow up with US GDP. A little news for today. Accelerated GDP. What do you know? It accelerated after two negative quarters of GDP. We pull it out of the hat at 2.6%. Better than expected growth turns positive. So what do you guys think that means? Gross domestic product rose at 2.6% in the third quarter. The estimate was 2.3. A narrowing trade deficit and increase in consumer spending and government outlays boosted the number. A sharp pullback in housing subtracted from the number, part of the broader decline in private investment. And consumer spending decelerated, increased at just 1.4% in the past quarter, down from 2% in Q2. So how does that play into the Fed's rate hike? The federal funds rate is forecast to be risen by another 75 basis points on November 2nd. Canada, they just, instead of doing the 75 basis point rate hike, they went with a half a point. And so I'm not sure what impact that's going to have on the Fed's decision, but I think they're going to hold the course. After this positive print in GDP, all that means is people have more money to spend. Inflation probably going to come out even higher based on that number. And that means what the Fed is doing is not working. So they're probably going to stay the course on the rate increases. I just had a great conversation this morning about what Greg Voss was saying, how there's a $400 trillion global debt, call it a sovereign debt crisis, but that includes mortgages, credit cards, all the debt in the world. Call it $400 trillion, according to the Institute of something finance. I'm going to play the video guys for you guys later today, but $400 trillion debt, the average coupon 3%. That means we have to come up with $12 trillion just to pay off the debt every year as a globe. The world economy is $100 trillion. And guess what? We're at a growth rate of 2% right now. That means $100 trillion at 2% growth. That means we're growing at $2 trillion a year. Yet our debt is $12 trillion a year. How do we fill the gap? Where's the extra $10 trillion come from? And you know where it comes from. It comes from central bank interventions like we're seeing in Japan right now. To bolster their currency, they just print more money. They print more money. What else is happening with the pound? They're printing more money to fill the gaps. And that's exactly what the U.S. has said they're going to do with this new Treasury bond buying program, Targeted Inflation Reduction Act, whatever they want to call it. It's absolutely crazy because you cannot fix the debt problem by printing more money. We all know that. That's why Bitcoin is ultimately the solution. It is the lowest risk-adjusted inflation hedge out there, in my opinion. Even at $20,000 as a risk asset, probably going to come down if the rest of the market comes down. But long term, as people begin to adopt this new technology, this life savings technology, they're going to jump on the bandwagon with Bitcoin. I think that's why the institutions are rolling out more and more, giving access to people more easily. And anyways, that's a Bitcoin rant for you today. Apple's earnings are going to come out today, so they're down 3.5% today. Most of the companies actually missed estimates, including Microsoft and Google, which I think I misreported on that the other day. So forgive me. So not only was Facebook earnings down, EPS was down for Microsoft and Google, which not a point for the bulls in the stock market, that's for sure. So Apple's earnings coming out. When are they coming out? Today at 5 p.m. And what else is going on? Elon Musk, he's going to buy Twitter, scheduled to buy it on Friday. And no, the layoffs, the 40,000 people he was going to lay off, that was just a rumor, it says. And supposedly he's going to be walking the floor down at Twitter going on Friday. So anything Elon Musk turns to gold. I don't know if that's going to be the same thing for Twitter stock price, but just let's check in on it really quick. What is Mr. Twitter doing? I know I have it in here somewhere. Twitter taking a shot up. Wow. Bullish, looking bullish there along with the rest of the stock market. I guess they like that news about Elon Musk. But here's the deal. We're coming into the 618 on most traditional assets right now. The dollar just cooled off incredibly. I mean, it just pulled back quite a bit. So what does that mean? What does that mean for NASDAQ, which it's not even holding its rally. It's getting faded as the dollar is popping up today, having a bit of a relief rally. And that is why I think, Bitcoin's down today. Stocks are down a bit. This is completely normal for it to come back and test the green 55. If we do close above it, that'll be a point for the bulls. But an open and a closure below the green 55 typically indicates more downside to come, especially on the daily time frame. What else do we want to look at? This is the area that needs to hold for the Dow Jones. Okay, we're just coming up on this trend line, which was basically coming back from this rising wedge, which is kind of where we got some downside targets for the, for the NASDAQ. And if this falling wedge does play out, it's going to come down quite a bit. I think it's more accurately drawn like that. And measuring the distance or the width. Let's see, did we already? No, we did not hit the target. So we are looking for a little bit, we're looking for a little bit more downside on that. Dollar providing a relief rally. But if this area does not hold, coming in at 31,952 on the Dow, if we start to see just a breakdown here, another local high, I'm willing to bet we'd probably have some major bearish divergence. Yep. So price is making a lower high, RSI is making a higher high, and that would give you just one drive. I mean, a shot down to the 31. Two drives. Is there another drive coming back from right here? Yes, there is. That'd be multiple drives. So price is making lower highs, yet the RSI is making higher highs. Anyways, that is the level I'm watching at on the Dow Jones, the S&P. Again, a lot of these rallies, if you look at the weekly time frame, we're just coming up to the 618 or the 0.5, even getting faded at the 0.5 here on the S&P. Bull traps all the way up to that level. So where does that compare with Bitcoin? Let's look at spot price action. So it depends on which wick you want to go from, but that is a weak bounce up to the 382 at the moment. So yeah, it looks like, bull traps again going to give us a little bit more on this move, and as long as the 4-hour time frame is holding here, especially that 9 exponential, I would expect one more try higher. And again, if we do see us base out along this trend line and then come back up, that'll be the indicator, hey, we're really going to get an upside move. All right, I'm going to leave you guys off there today. Hope you have a blessed and highly favored day, and I'll bring you some more cryptocurrency news tomorrow. Take care.